anticlimax to the expectations we had at the close yesterday, and indeed this morning. The market is not giving us the move it was expected to give. Let's do a quick reality check. We'll guard our biases, we'll understand what is happening, and we'll take a fresh view of the market environment today. So first and foremost, we spoke about it in the open today. The market was in a balance and was expected to give you an imbalance, and that imbalance is happening at the moment. We are looking at that move away from that 2-day balance, but that imbalance is not coming out in the way we expected it to happen. So two things over here: the market is wanting to put an imbalance, and the imbalance is due to the formation of a 2-day balance yesterday and the day before. We are coming off it. Is the market doing a good job in that imbalance at the moment? You would look at the data right now and you would say that the B is not gone below the A period lows, the lows of the A period, and the C is hovering around VWAP. So the sellers were given a good invitation to drive the market lower, and they are not yet doing a good job of it. Is it still over? Is the supply completely thrown in the towel? Is the market flipped? Absolutely not. You're seeing the purple above the blue. That is a supply in control. So you stay with a sell side bias, you stay with a long put bias, you stay with a bias which invites you to sell calls. So as long as the purple is above the blue, you're looking for the supply to be dominant. It's a different matter that they are not really dominant, but it also makes sense for us to keep looking for long put opportunities in this market. This is not at all a market. We are looking for buying calls. Those are the kind of trades which would tend to destroy your trading account over a period of time. And we don't want to do that over here. We want to keep it rigid around the process we follow. And that process simply means that when we are below a 2-day balance, we are below a value area low, we look for opportunities to get into the short side of the market. You could think in terms of calls over here, long calls, but those are highly contradictory methods, and over a period of time, if you avoid these methods, you tend to have a more beneficial account on your trading account. So we'll stay okay with the put bias for the moment, long puts that is, and we'll stay with it as long as the purple is above blue and we are staying above the value area low and indeed the range of yesterday. So we identified one level at the open, that was 25,970 in the futures, 25970, and as long as the market stays below this 2590 level, you are looking for opportunities to get back into this short side of the market. Now, why is this 25970 important? Because I put it out on a tweet also yesterday, and on Twitter that is, and we saw it on settlement day, and we saw it even yesterday. The market did not really put in a lot of supply at that 25970 previously. Now there are a couple of things happened over here. It's an old adage in the market. It's an old saying in the market. A previous support zone, when broken, becomes a resistance zone. So that resistance zone for us is 25970. The other thing about that 2590 is also the lows of the 2-day composite profile. So if the market decides to get into 25970 for any reason, and I maintain that for any reason later in the afternoon today, it would force a lot of short covering, and it could mean a market going back about 100-150 points very, very quickly. So that's why we want to keep that reference around 25970, and into that into those lows of 25,883, we saw some supply coming off, zeros on the sell side. Some demand came in that 172.2 and 39. I was looking at that VXR chart, the NTM Volex chart, and when we were holding that put, I saw the NTM slide off right over here around 9:30. It was continuously dipping. So this is telling you that even though the purple was going up, the blue was also going up. So demand was not completely out. The ideal situation for this VXR volume X chart is this is purple rising and blue going flat. So that will tell you a 45 degree is happening. That will tell you that the imbalance is dominating, is strong out over there. What I was looking for in this chart was this blue to taper off, to go flat, and a 45 degree rule to come about because of that move into imbalance. That did not happen. The VXR dropped from a high of 2.83 to about 1.5, and that was the reason we got off from that long put trade. And it's a good thing we did. It's a good thing we did because that put dropped down to a level of 230 or something. So all is not yet over. All is not yet over. I'm still looking at the possibility of getting back into that put, provided we get a little bit better in terms of evidence over here for the market. I would still like to see that VXR do what it generally does. A 45 degree into an imbalance is the right move for us. So this came down to about 230. 225 is the zone I'm watching. There's an IB3 which is being put up. It's good. Okay, we are seeing that IB3 show up, but this would be the trade we would be looking to take out later in the afternoon trade. If you're taking this trade right here, you can put a stop loss of about 212, which is right below these zeros, these prints, zero prints, and look for a move back into 285, 290 on the purple being above blue. But it's not really a clear 100% concrete signal at the moment, and you've got to be a little bit careful about the way you are putting risk in the market. So I hope that is clear about how we are going about the day today, about how we are going about the business which we intend to do. Let's not get lost. The market does not have to do what we expect it to do. That's why it's called a market. It will continue to do what it has to do. We are the ones who have to follow it. So we came off at the open today expecting the imbalance. The market has put in a move lower. It is an imbalance, but it is not done what we expected it to do. And the problem with that statement is our expectation. The problem is that we were expecting the market to go down a big way, and it has not. It has just done about 100-point move. So that expectation of ours should be met with a little bit of clarity, because the expectation is based on what the market is expected to do, but you should also be looking at what is the market actually doing. And if you are looking at that NTM Volex chart, you're looking at those puts, you're looking at what the market is doing around 280, 290 in this particular put, 26,100 put, you can say that it is not doing a good job. Having said that, keep the bias on the long put side. For me, my chart for today is the NTM Volex. Keep this chart open, and technically, if we get a 45 degree going on this chart, that means the blue flattens off over here, the purple keeps rising. The VXR would go up to about 2.53. That should be a good enough condition for us to get into the put side of the market. What would that condition tell us? That condition would simply tell us that supply is getting far, far stronger than demand. And when supply gets stronger than demand, price gets an added incentive to drop down over here. So it's not happening at the moment. Price is flat because VXR has gone flat, and it's at about 1.43 right now. It should go back above 2.53, and I've seen the strongest moves come when this particular VXR goes up above 4.56. That is the time you actually can double and triple on your sizes, and can expect those fast moves coming from the market. A quick look at the gamma density. So the gamma density of the market. Just before I go into the gamma density, I just wanted to have a quick look at the IV chart. I'll come to the gamma density. Let me quickly go into the IV charts. So that's the IV smile over here. You press the Nifty. Let me get this right again. Okay, you can go in via the OI Viz chart also. So plot type has a screen loaded for all. Plot type IV. Has a screen loaded for all. Plot type IV. Okay, so IV split. IV split is what I look for, and you will look at these IV splits at the money, or where prices trading this vertical line. This is about 13 and 11. The out of the money puts will keep rising and falling, my friends. Okay, they keep dropping, and they depend on how people are looking at it. But what I look for as a secondary signal in this IV call puts, because we get this data individually for the call as well as put. I look at the difference between the red bars and the put bars. So that always tells me which is having a little bit more in terms of demand. And I'll just stress this word over here because it's important to understand. It's a little bit more in terms of demand. For instance, this particular graph is now green above red at the close yesterday, and this was the 11th. We'll go back to a time around 3:30 p.m. The red was above the green, and that was an added incentive, a secondary confirmation for me that the market was looking at downsides over here. But what has happened right now, if I reset this, the IVs itself tell you a small story about what the market is. Now, this is a dynamic chart. So currently at 10:52 a.m., the green is above the red. So that's also telling you that the supply is not really there. The green above red is that blue line rising in the NTM Volex chart. So demand has not completely given out. So as the market was dropping, the NTM Volex showed us, okay, that the purple was rising as well as the blue was rising, and there was a little bit more aggression showed on the call side buying, which is why the green is gone above the red in the IV of the individual shorts. So that's also telling you that demand in the market is not completely absent. It is there in the market. If this flips anytime during the day and at the money, and I'll stress again, at the money. So you're looking at where this white line is. At the money, the next 2 or 3 strikes go red above green, along with your NTM Volex, along with your IB3 inputs, etc. This becomes a added confirmatory signal for you to know where the price of the market is. To know the prices of the individual, just hover your mouse on top of it. So here at 25,900, I am seeing a CE at 11.87 and PE at 11.11. So this is an additional signal. It's not a signal on which you take a trade on. It is IV, implied volatility, and IV is also a derivative of price. Most people in the market would think of IV as a guide to future price movement. It is, and it is not also, because the more price drops, the more puts get bought, and because more puts get bought, the IV of the put can keep increasing. So it's a catch-22 situation in terms of a confirmatory signal by itself. We adopt a balanced view on our outlook towards IV. It's not a predictor of future prices, but it can tell you who is buying more in the market in terms of calls and puts. So this green above red is temporarily halted that move lower. You can see that same in the NTM Volex. The difference, okay, should have been bigger, but it's not. So that's why we did not get that move to imbalance early in the morning today. So keep this NTM Volex up also for the rest of the day and see if we can get a 45-degree line on this. See if we can get a 45-degree line on the NTM Volex chart, and if it does, we would be in a situation where we would be thinking in terms of a big imbalance developing out in the market. So the classic signs for us right now, I'll come back, okay, to a market profile chart. The classic tell for a market right now, this is the NTM Volex chart, of course. I'll come back to a market profile chart. The A period and the B period is done. So we've seen a move above, below the value area low. I'm sorry, we are seeing a move below the value area low. We are seeing A period lows, we are seeing B period lows. C has done, D has started. Now, what do you think the market should be doing here if the seller has to initiate? The market first and foremost has to put in an extension lower. What is an extension lower? A move below the initial balance low. So that IBL is currently around 25,883. 25 IBL is 25,883. We got to think in terms of supply adding below 25,883 and pushing that extension. If that happens, watch the NTM Volex chart to see if purple goes strongly above the blue. And a third thing you could look at is IB3s in your 26,100 puts, etc. So I hope that clarifies. This is what you would be looking for in the market to take this forward. You're looking for more intent on terms of supply so that the path goes lower for over here. This view is good till price stays below 25,970, 25,970. I'm expecting a big short covering if for any reason during the day price goes back about 25,970. Right? I'll pause. I'll just take a few questions just to get a lot more clarity for the group as a whole on what we spoke about. Venkateshwara. So yes, like IV is increasing in CE means demand for long CE. Yes, IV increasing, not on the whole. IV increasing vis-a-vis the put in the strike. So that chart which I showed you of the IV split has got the call IV and the put IV of one strike. So at one strike, if I can see a consistent pattern of longer CE, IV of the CV being higher than the IV of the put, that is telling me that slightly demand is more aggressive in terms of buying the calls out over there. Rishabh, should we consider responsive buying from the market? Green above red in IB. Same question. Yeah, green above red is a sign of maybe demand coming back into the market via those calls, and that is also why the NTM Volex did not drop off when we had that long put in the market. So it's long put. The contra signal for us is there that the buyers have not completely thrown the towel. but it does not mean that you close your eyes and buy long calls in the market. We are still below value area low, and I'm biased towards the short side purely based on the rules and the framework and the system which we have at play. So we'll keep that. Only thing what we watch for is whether supply or sellers continue to do a good job going forward. Right. So to sum it up, guys, we are looking for long puts, call shorts, long futures in this market. Why? Because we are below the 2-day balance. We are trading below value area low. For us to action the next trade, we have to look for an extension lower, that is a move below the A period and B period lows of the day, the IBL. If we get that, we are looking to launch into our puts. We'll also be keeping an eye out on the NTM Volex chart, the purple and the blue. If that goes and that changes, we change the situation of the bias. Yes, we have a 25,900 CEPE going right now. That's because the market is in a balance. That continues to be a hold. If anything changes, we will update on that. The change is what I just spoke about. If any of those conditions are met, we come out of that 25,900 CEPE and we go directional. You can also think in terms of buying that 26,100 PE, which will hedge the activity of the 25,900 PE. Right? So I'll switch it back to the order flow charts, guys. And if there's anything else to be added, let's do it over the text chat.